Now, oftentimes we get the question, well, if I like Bitcoin, why don't I just buy Bitcoin? And you hear this a lot from traditional observers that don't understand the BTC business model. And I'm here to give you the quick answer to that. 97% of institutional capital is mandated to buy equity or credit instruments, not commodities. So the first answer is, well, there's 30x more money in the capital markets that can buy equity or credit that's backed by BTC. And much of this money that just literally cannot, per their mandate, they cannot buy a commodity. Now, if you look in the lower left corner of this screen, you see there are $3 trillion of capital that might very well buy commodities, but 2.3 trillion of that is central banks, primarily allocated to gold. And as we're all well aware, central banks are very conservative public actors. They're not hedge funds. They're not going to reallocate the gold reserves of the nation to Bitcoin in a quick and easy trade. And so that means you've just got $700 billion of private capital that might trade commodities. So consider the difference between $700 billion of capital to buy commodities versus $95 trillion of capital that can trade in equities or credit instruments. And that helps you understand why there's such an enthusiasm for Bitcoin-backed credit or Bitcoin-backed equity. As it turns out, I mean, the mandate of a credit investor is simply not to take the extreme leverage of equity, and they simply don't want commodity risk. And of course, equity investors don't want the performance of credit